David, it seems like this happened suddenly, but were there any signs of it coming? Volkswagen has always been putting a lot of mileage on Rivian, but there wasn't much of a sneak peek. Rivian was obviously making money, and they were in need of funds. They have been spending money quickly, and considering their poor output, it didn't seem likely that they would ever turn a profit. They might have been able to find financial partners if they had required money. This is really beneficial to both Volkswagen and them. In addition, Rivian benefits from having a partner with large auto industry engineering, production, and a large parts bin that they can use for non-EV parts. Perhaps they can reduce their expenses far more quickly than they could have done it on their own. Volkswagen is producing electric trucks under the Scout division, which is what led me to believe that they had their own EVs before doing this. But if you've been watching the EV scene, perhaps they'll obtain access to Rivian's SUV and pickup. You'll be able to tell that things are becoming hotter and that Tesla is in the thick of things. We'll discuss the most recent market developments, large investments made in rival automakers like Rivian by Volkswagen, and how these actions are influencing the sector today. We're delving deeply into the methods underlying these investments and their implications for Tesla's future rather than merely glancing at the statistics. Why would this be the ideal moment for you to buy more Tesla stock? Why does Tesla differentiate itself even as the competition intensifies? We'll investigate these and other issues, giving you in-depth knowledge and analysis that might affect the way you make investments. So fasten your seatbelts and get ready for a thorough analysis of the reasons why Tesla's stock may soon soar. Don't forget to ring the bell and hit the subscribe button to receive updates on our most recent videos. The market for electric vehicles is the focus, and Volkswagen's significant investment in Rivian is making waves there. You may be asking yourself why Tesla is getting all the attention yet Rivian is the one getting paid more. That's why this is important. Rivian has been spending a ton of money. In just the last quarter, they spent an astounding $1.5 billion. Without this financial boost from Volkswagen, Rivian looked to be in danger of going bankrupt by the end of the year. Volkswagen's plan to pour up to $5 billion into Rivian is significant not only for its ability to keep the business afloat, but also for the competitive environment in the U.S. electric vehicle market, where Tesla is the main competitor. Volkswagen's calculated action may be interpreted as a countermove to Tesla's expanding might. Let's consider that for a little while. If not for tough import regulations and sanctions, Chinese electric cars, which are renowned for their low prices, might rule the world market. This hypothetical situation depicts a fiercely competitive market in which established automakers are making a concerted effort to close the gap. Moreover, the market for electric vehicles comprises much more than just the design and production of automobiles. It also includes a large amount of political sway and deeply embedded customer preferences. Prominent remarks made by notable individuals like the late President Donald Trump have greatly influenced public perception. Trump's criticisms, which frequently highlight alleged disadvantages of EVs like short range and charging problems, are based on older EV models and do not fully reflect the industry's most recent developments. And climate of challenges has been created for electric vehicle businesses such as Tesla by this political activity. When a prominent political figure expresses suspicion, it might cause widespread reluctance among prospective purchasers, which can impact investor confidence and market sentiment. Furthermore, these political declarations have the power to affect financing priorities and regulatory policies, both of which are essential for the development and growth of the EV market, in addition to influencing customer choice. The complexities are increased by the tastes of the buyer. Consumer behavior and attitudes regarding the practicality and convenience of electric vehicles are changing as more people switch from conventional gasoline-powered automobiles to electric ones. In order to sustain and improve its market position, Tesla must constantly traverse the shifting sands of political power and customer sentiments. Despite its inventions and leadership in the industry, Tesla's business climate is made more complex by the way politics and public perception interact, which leaves the company's market sentiment vulnerable to variables other than financial measurements or product performance. Now let's look at Rivian's situation. In spite of its financial difficulties, the company has managed to carve out a niche for itself by creating aesthetically pleasing, high-quality cars that have access to Tesla's charging network. Thanks to Volkswagen's investment, Rivian may be able to keep improving its products and services and grow its market share through at least 2026. Such developments may be important to those who are interested in investment strategies and market dynamics. It's an engaging story about how established automakers are negotiating the transition to electric cars by collaborating with upstarts like Rivian to challenge Tesla's hegemony. Observing these calculated actions makes us wonder about the future of the electric vehicle market and how these investments will affect the competitive environment when it heats up. The financial community is constantly monitoring the actions of big participants such as Volkswagen, which seems to be deliberately hedging its bets on Rivian. Volkswagen's strategy is similar to buying a call option on Rivian, effectively using it as a backup plan in the event that traditional manufacturers have trouble keeping up with the explosive growth of electric vehicles. These actions reflect a larger feeling in the institutional auto sector, which is a tangible fear of Tesla's increasing domination, particularly since battery costs are expected to drop and hence increase Tesla's profitability. Lower interest rates generally lower borrowing costs, making it less expensive for consumers to finance large purchases like cars and for companies like Tesla to invest in growth and innovation. This holds great promise for the electric vehicle industry, especially for companies like Tesla. This financial climate may act as a stimulant for Tesla, giving it the leverage it needs to quicken its pace of growth and expand its capacity for production. This possible interest rate drop might be a game changer for Tesla since it would allow it to finance its ambitious initiatives more affordably and increase consumer affordability, which could increase demand for its cars. In a situation like this, Tesla might have a clear edge over established automakers, which are currently making the switch to electric vehicles but are frequently hindered by a slower adoption of current infrastructure and technology. In addition, investors may notice improved profitability made possible by lower financing costs and more sales volume, which might raise Tesla's market valuation. If the industry stabilizes after the adjustment to lower loan rates, Tesla may be able to outperform more established automakers thanks to its strong product portfolio, established market leadership, and increased investor trust. The ongoing financial struggles of Rivian, a direct competitor and recipient of significant investments from Volkswagen, are being closely monitored by market watchers. Despite these difficulties, Rivian's role is crucial in Volkswagen's strategy to counter Tesla's dominance. Rivian's ongoing financial struggles are often referred to as a fire pit of cash burn. The backing from Volkswagen highlights the fierce competitiveness in the EV market by strategically placing bets on several fronts. The dynamic that Tesla finds itself in between up-and-coming rivals like Rivian and well-established leaders like Tesla highlights larger market trends and competing tactics in action. I hope the updated text satisfies your needs.